Welcome, grade 12s. Yes, you with Ashraf Patel and crew on our journey to the moon. Today we're going via the balance sheet. Okay, and we're starting off with an appetizer where you can see we have something just as a starter where you have to match column A with column B. Right, and your minute starts now. Welcome back, grade 12s. Right, very simple. Shareholder, immediately you can see these are the owners of the company, so that would be the alphabet B. Director is appointed by the shareholders to manage the company, so obviously that would be D. Now watch this one. The internal auditor monitors control measures to prevent mismanagement and fraud. Definitely. Why? An internal auditor is appointed within the company to do internal control measures. Right. So obviously your external auditor would obviously be C, meaning what? Again, look at the reason, the rationale behind it. He or she expresses an opinion on the financial statements of a company. Remember, your external auditor is appointed by the shareholders to express an opinion on the financial statements. Okay, that was a lovely appetizer. We now move on to the question, Paradise Limited, and we have to complete the ordinary share capital note as well as the retained income note. Obviously, we also have to do the balance sheet and all the workings. Let's start off with what we have. We are told about ordinary share capital. We are given information, right? All our balances are given to us, and we are told that with regards to share capital, that's the information that we have. Okay, so now, immediately we go into ordinary share capital, and you will see that we use the information to complete that ordinary share capital note. What information do we start off with? Firstly, we say that in terms of my information, what do I have? We are authorized to sell 5 million shares. Remember, that's the figure that we are authorized to sell. This does not mean that that's the actual number that we have sold. So we are told here that 3 million shares were in issue on the 1st of March 2015. So immediately you go back and say, fine, if that's the case, we've got 3 million shares, okay, when at the beginning of the year. And we are also told that these shares have a value, right, of 6 million rand. So immediately we assign the monetary value to it of 6 million rand. Got that? Given information. What else do we know? We are told that regarding the shares, 1 million new shares were issued on the 1st of December at a market-related value of 5 Rand per share. Right. Okay, so now I say fine. Bring in the 1 million shares. There goes 1 million shares, which were sold during the financial year. right? And we were told that we sold it at a market value of 5 Rand per share. That would give me my monetary value of 5 million shares, okay? 1 million times the 5 Rand. Okay, now what am I told? I'm also told regarding my shares that 200,000 shares were repurchased. Remember the buyback, okay, on the 20th of February 2016 from a shareholder who was relocating to another country. A payment of 770,000 was made on the 20th of February 2016. Right, what has happened? We've repurchased shares. How many shares have we repurchased? 200,000 shares. So immediately, that's the number of shares, right? These were bought back. So we bought back these shares. But now, important, very important. What do I have to do the moment there's a buyback of shares? The first thing that I need to do is to calculate my average price. And how do I calculate my average price? Very simple. This is what I'm going to do. I'm going to take the value of the shares, which was 6 million, plus the 5 million, remember the Rand values, to give me a total of 11 million Rand. Divided by the number of shares, at that point was 4 million shares. Okay, and this will give me a value of 2 Rand and 75 cents being the average price. Multiply that now by your 200,000, okay, and that will give you a value of 550,000. Okay, guys, now what is the 550,000? The 550,000 is the buyback of my shares at the average price, and that's what's important. The moment you have a buyback, the first thing that you do is calculate your average. What did I do? I took the number of shares that were issued, which was 4 million, and I divided it by the monetary value of those shares, which was 11 million. Watch. The question told you that you had repurchased these shares for 770,000 Rand. That is your bank figure. That is not the figure that you use in your ordinary share capital. In your ordinary share capital, you use your average, and that is determined by adding the number of shares by the monetary value, the Rand value, to give you the average. So remember, we worked it out at 2 Rand and 75 cents as our average per share. So we bought back 200,000 shares at 2 Rand 75 to give me a value of 550,000. Got that? Okay. What are we now left with? Obviously, we're left with 3 million plus a million is 4 million minus the 200. We're left with 3,800,000 shares. Got that? At the end of the year, and the value of those shares would be simple. You take your 11 million. Let's do that. Let's take the 11 million that we had minus the 551,253,000 to give me a value of 10,450,000. Now, there's just something else that I want you to see. If I divide that by 3,800,123, notice what I'm going to get. I'm going to get a value of 2 Rand and 75 cents, which is the average price. Keep that in mind, an important calculation. Okay, so we're done and dusted with our note, the ordinary share capital note. The next thing that we have to do is calculate the note that they want from us now is my retained income note. Okay, now this retained income note, I need my net profit before, I need my net profit. Look at the information that I'm given. I need to calculate my net profit after tax. Okay? And I start off with my calculation. What do I have? I'm told that with regard to my taxation, sure we got information here regarding our taxation. Here goes. After taking into account all relevant information, the net profit before tax was accurately calculated to be 3,800,000. Okay, now that I have that, 3,800,000, watch, that's my net profit before tax. I now need to subtract my taxation. That's right. And where am I getting my taxation from? What am I told? I'm told regarding my taxation that my tax amounted to 28% must still be brought into account. So immediately I say, fine, if that's what I need to do, let's do that. It's your 3,800,000, okay, times 28%, and that's 1,064,1064,000, right? So I've got my taxation minus 3,800,123, and that will give me my figure that I'm looking for, 2,736,000. Okay, the only reason using a negative there is because I used the smaller figure instead of having to retype into the calculator. Time-saving device, 2,736,000. Watch, where did it come from? My 3,800,000, which was my net profit before taxation. I subtracted my taxation, and that gave me my net profit after taxation of 2,736,000. Right. What's the next thing that you have to bring in? Remembering that you look at this note, you are given this note with no details. Some of it is filled in, but you need to know that you need to bring back the buyback of your share. That's right. Okay, now if you recall, we had bought back these shares for 770,000, which was a total buyback, of which the average price was 550,000, if you recall from our previous calculation. Therefore, what we now have is the 770,000 minus 550,123, and that will give me a value of 220,000. Remember that that is the buyback of your share, which is indicated in a bracket. Okay, now watch this. What have you done? You've used the bank figure, you've subtracted the average price, so the price above the average price is what appears in your retained income. Keep that in mind at all times. Right, with regards to my dividends, remember it's my interim and my final dividend that I need to bring into consideration in this note. Let's see what information I have. With regards to my information, what am I told with regards to dividends? The directors paid an interim dividend of 840,000. Given figure, examiners were kind to you. 840,000 is my interim dividend. Slot it in. Right, let's see what we have with regards to the final dividend. A final dividend of 44 cents per share was declared on the 29th of February 2016. All shares, including the shares that were repurchased on the 20th of February, qualify for the final dividends. Okay, in other words, all the shares qualified for the final dividend. It's important, guys, like Ashraf always says, RTFQ, read the full question. Why? Because you could have been told differently. You could have been told that the shares that were bought back do not qualify, or the new shares that were sold ex-dividend. They were sold excluding a dividend. It's important that you read, understand the information, and then be able to apply what is given to you. In our case here, all the shares, including the shares repurchased, qualified for a final dividend of 44 cents per share. If you recall from our calculation that we've been doing, we had 4 million shares, right? Okay, the breakup once again, the 3 million at the beginning, plus the 1 million that we sold. We're not taking the buyback because they're telling us that they do qualify for a dividend, times your 0.44, which is 44 cents, right? Let's do that. Immediately we say, take your 4 million shares, multiply that by 44 cents, and that will give you your final dividend of 1,760,000. 1,760,000. All that you do now is you add that plus your 841.23, and that will give you your total dividends of 260,000. Obviously, you're going to take your net, you're going to take your balance at the beginning, add your net profit after taxation, subtract your buyback, subtract your dividend, and that will then give you your balance at the end of the year. Wow. End of session, guys. Let's take a quick break. And when you come back, yes, something interesting on the balance sheet. Wait for it. Welcome back, grade 12s. Yes, the balance sheet. And I can see some concerned faces in front of me. Guys, don't panic. Ashraf will be the mechanic to sort out all your fears and challenges. Okay, now, when it comes to a balance sheet, understand something. Once you know the format of your balance sheet, I promise you, half your battle is won. Now, clearly you can see, and I've been doing some work while you were on a break. What I did was, I went back and I just inserted figures from the ordinary share capital, which we already had prepared, do you recall, in the previous segment, and the retained income, and I started inserting that information. Now, what I want you to see is you've worked out the ordinary share capital, so all that you do is you take the amount from where you've calculated it in your note, and you just insert into the balance sheet. The same applies to your retained income. You've calculated the note, you've worked it out, you insert the figure into your balance sheet. Right, non-current liabilities, we know deals with our loan. And let's see, what information do we have regarding our loan? There goes. Right, you are told that the loan was from Director J. Jonas. The loan was originally received on the 1st of December 2013. The loan is to be repaid over 5 years in equal monthly installments with effect from the 31st of December 2013. All payments have been made. Interest is not capitalized and has been paid in full. Right, before I ask you to calculate this here, I'm going to first insert a figure here for you, which you will need. There's your loan from Director J. Jonas, 1,155,000. Let me put it here, 1,155,000. And the reason that I'm putting it here is because I'm going to give you 2 minutes to sort out this loan story for me. 2 minutes, guys. Go for it. Okay guys, I hope you've got it sorted out. Watch. The most important thing for you to remember is that the loan was originally received on the 1st of December 2013, right? So now, if I say December 2013, right, up to the 28th of February 2014, that would give me a period of 3 months, right? Then the financial period after that would be the 1st of March 14 to 28th February 15, next financial year, right? And then this financial year, which is the 28th of February 15, sorry, 1st of March, sorry, not February, 1st of March 15 to the 28th of February 2016, another 12 months. And this is key to your calculation. Watch. 12 plus 12 is 24, plus 3 is 27. In other words, what has happened, and this is what you need to see, that you had arranged to make 5 years in equal monthly installments. That would give you a total of 60 installments. Am I right? Where did it come from? 5 times 12, of which you have made 27 payments already. And this is equal to 33 payments that you still have to make. Now, grade 12s, this is key to your understanding of this question here, right? Once again, let's go through it. 60 are the total payments that you have to make, of which you've made 27 payments. Where did I get my 27 payments from? There's it. 3 plus 12 plus 12. Okay? Meaning that you are left to make a total of 33 payments. And this is what you now do. And you say, fine, your loan is 1,155,000. $1,155,000. Okay? That's as of the end of this year. What do you want to subtract? You want to subtract the payments that you have to make within the next financial year. Why? You want to separate your non-current from your current portion of your loan. And therefore, what you needed to ascertain was that you had 1,155,000 as a balance on your loan account, given, divided by 33. Why? Because you still have to make 33 payments, and that will be equal to 35,000. Multiply that by 12, because you have to make 12 monthly payments over the next financial year, and that will give you a figure of 420,000. Okay, so therefore, minus the 420,000, and that should give you an amount of 735. Let's check it out. Minus 1,155,000, and that figure is 735,000. So there's your loan figure, 735,000. At the same time, what you need to do is take the 420,000 rand and put it here as your short-term loan, or the current portion of the loan, an amount of 420,000. All right, loan done and dusted. Guys, always approach a question with this in mind, that you need to solve the problem. And if you see it and you work through it systematically, I promise you, you'll definitely ace it. Right, what else appears under trade and other payables? I have to find out what items do I have in my balance sheet, in my balances that are given to me, and I have to identify those figures. There's my creditors control, 478,000. Let's slot it in, 478,000 as a trade and other payable. Let me see if I have anything else there that would form part of my trade and other payables. I have accrued expenses of 12,000 rand. Therefore, I slot that in, 12,000 rand. plus my 12,000 Rand there. Let's add those two figures together. 478, 480, it's 490,000. Okay, please make sure you use your calculator, right? You've got your trade and other payables. Okay, this is obviously taking into consideration that you have no other trade and other payables. Okay, what else do we know? What else needs to appear in my note under current liabilities? I need to, once again, see, I need to know my information. I know I must look for my shareholders for dividends. And I calculated it, didn't I? Obviously I did. Let's see if we can find it. We should be able to find it. My shareholders for dividends will always be my final dividend figure that I calculated in my retained income, 1,760,000. Okay, let's slot it in. 1,760,000. Okay, we just seem to have passed it. I think here it is. 1,760,000 is my shareholders for dividends. 1,760,000. Once again, it's something that you have calculated already. So refer to your retained income note, find the figure, insert it into your balance sheet. There's no need to go and recalculate it. You've done that calculation already. Remember, in accounting, you're writing against the clock. So you need to make sure that you maximize the time that you have available to answer the questions that you need to answer. Right. Then I also need to check my SARS income tax. Now, be careful with SARS income tax. Why? Because SARS income tax could either be a trade and other receivable or a trade and other payable. Okay? So, let's see the information that we have. I think it appears on this page here. There we go. There's the information that we had. Remember, we calculated our income tax figure and take into consideration that you have made a provisional payment to SARS, and that provisional payment to SARS amounted to 1,012,000. All right? You have 1 minute to sort out whether SARS income tax would appear as a trade and other receivable or a trade and other payable. Go for it. Okay guys, watch what I've done for you. You see this 1,064,000? That was your tax liability for the year, of which you've made provisional payments to the value of 1,012,000. This means therefore that if we take the 1,064,000 and we subtract our provisional payments of 1,012,123, that will give you a figure of 52,000. In other words, the amount that was payable to SARS was greater than your provisional payments, and as a result of that, you now have a liability to the value of 52,000 Rand. This means, therefore, that you have 52,000 Rand as a liability appearing under current liabilities as your the amount that you still owe to SARS. Right, the reason I'm doing this, let's put in those figures here. 1 million and, what was it, 1,062,000 minus 1,012,000, what was it? Let's just identify that figure. So we got the correct figure there. 1,012,000 is correct. Okay. And therefore, when we did the calculation, we found that we had SARS income tax as a balance of 52,000 Rand. Okay, this means that the amount that you paid to SARS was not enough to cover your tax assessment for the year, and as a result of that, you were left with a liability of 52,000 Rand, which you still owe to SARS. Right, watch what I've done. I've completed the bottom half of my balance sheet, right? Obviously, I'm going to total it, and once I total it, then I move ahead and do the next half of the balance sheet. I'm sure you are anxious to see it. Wait for it, guys. Take a quick break, and we'll see you in a jiffy. Welcome back, grade 12s. Yes, we're busy with the balance sheet. Now remember, once again, while you were having a quick break, I just did put in some totals for you, and these are purely additions. Remember, what you're now going to do is you take your ordinary shareholders' equity of 12 million, you add your non-current liability of 735,000, and you add your current liabilities of 2,722,000. Obviously, that will give you a total of 15,457,000. Very important. 15,457, that's the principle of the balance sheet, is that the total of your equity and liabilities must be equal to your total assets. So once you've calculated this to be 15,457,000, you take that same figure and you slot it in as your total assets. There goes. Now, let's identify figures that are given to us. Okay, starting with my fixed assets, what information do I have? I'm told that my fixed assets at the beginning of the year had a carrying value of 12,278,400. So immediately I say 12,278,400. Right? Okay, that's the carrying value at the beginning of my financial year. So I start with it, and I must be given other information as well regarding my assets. Let me see, what am I told? There's it. Fixed assets and depreciation. No fixed assets were purchased or sold during the financial year. No purchase, no sale. But I do know that I had depreciation for the financial year amounting to 890,000. We all know that depreciation is an imputed expense. The double entry to record depreciation is a debit to depreciation and a credit to accumulated depreciation. Now, once you do that, it reduces the carrying value of your asset. Simple. So, 890,000 is the amount by which my carrying value will diminish, minus 890,000. Okay, and let's do that. We've got 12,278,000. Okay, I got that wrong. 12,278,400. Okay, minus 890,000 to give me a value of 11,388,400. So 11,388, 400 would be the value of my fixed or tangible assets. Right, once again, recap. Take your carrying value at the beginning of the year, subtract your depreciation for the current year. There was no purchase and no sale. Obviously, if there was a purchase or a sale, it would impact on that calculation. Right, what else do I know about my current assets? I know that my current assets is made up of 3 items, or at least I should know. What are they? They are inventories, trade and other receivables, and my cash and equivalents. Correct? Okay, let's see what information I have. I come down to trading stock and I see it says there balancing figure, question mark, panic mode, don't fear. When? Ashraf is near, that's right. Okay, so if it's not given to me and they're telling me that it's a balancing figure, don't be perturbed, you'll get to it. But do I have debtors control? Certainly I have, 356,000. So let's start with what we have. 356,000 would be my trade and other receivables. 356,000. Obviously, I need to see what other information I've got with regards to trade and other receivables. I've got, they're telling me that bank is favorable. Again, a question mark. We'll get there. I've got prepaid expenses of 6,800. Okay, let me slot it in. Prepaid expenses would be part of my trade and other receivables, 6,800. Okay, and going back, I've got SARS income tax, but I've already dealt with it. Remember, I know I've established that it was a liability and therefore it was placed as a liability. But don't take that for granted. Don't assume that it will always be a liability, because if your provisional payments have exceeded your assessment for the year, then it will not be a trade and other payable, but it will definitely be a trade and other receivable. Please watch for that in the exams. Okay, now we come to provision for bad debts, 16,000 when at the beginning of the year. All right, what am I told about my provision for bad debts? Let's see, what information do I have about my provision for bad debts? There should be information, there goes. Provision for bad debts. The provision for bad debts must be maintained at 5% of outstanding debtors. Right, okie dokie. Into my balance sheet, I know my debtors are standing at, where is it? 356,000, so immediately I say fine. Take your 356,000 and multiply it by 5%, and it gives me a value of 17,800 minus 17,800. Now, this definitely you need to understand. Why am I using the 17,800 here? Because the total amount of my provision, my new provision, needs to be 17,800. Remember, I'm doing the balance sheet. However, if my question was on the income statement, then grade 12s, watch. My existing provision is 16,000. I need a new provision, and the new provision needs to be, in terms of my calculation, 17,800. So now, again, I'm just diverting for a while. I'm going to the income statement. In the income statement, it's my provision for bad debts adjustment figure. And what is that figure? The amount by which you are either increasing or decreasing your provision. Remember, you got an existing provision of 16,000. Goes, clear? And I need a new provision of 17,800. 1,800 like I calculated. So clearly you can see the 1,800 would appear in my income statement, but my balance sheet has the final total of 17,800. Clear? Okay, so there I have my trade and other receivables sorted out. Okay, now I need to determine my cash and cash equivalents, right? Let's just do this calculation first. We have a figure of 356,000 as our debtors control. We added the prepaid expense of 6,800 and we subtracted our provision of 17,800, and that gave me a figure of 345,000. Okay, so 345,000 is my trade and other receivables. Okay, now I need to calculate my cash and cash equivalents. But when I go to my information, I find that my bank figure, which is supposed to be favorable, so it has to appear under my receivables, under my current assets, sorry, is an unknown. What other information do I have? What other information do I have that's important for me to take cognizance of? Aha, see it. I'm given my current ratio and I'm given my asset test ratio. Okay, now I know that in my asset test ratio, which is 0.8:1, the asset test is made up of what? It's made up of inventories plus my cash and cash equivalents is 1. I know what my liabilities are, don't I? Certainly I know what my liabilities are. Let's check. My current liabilities, the total of my current liabilities is 2,722,000. So therefore, if I know that this is 2,722,000, and I also know that this has to be 0.8:1. So immediately what do? This is what I do. Watch. I take my figure of 2,722,000, 2,722,000, right? 2,722,000. I'm solving for my unknown, remember, which is 0.8. So cross multiply times, excuse me, 0.8. And that gives me a figure of 2,177,600. Now, the 2,177,600 is made up of two components. What are those two components? It's made up of inventories plus cash and cash equivalents. Got that? Okay, but I have my inventories, don't I? So let's identify our inventories figure, which we've done, which worked out to, sorry, let me say that again. Let's go back here so we have clarity here. I'm saying that my asset test ratio is made up of my, not inventories guys, trade and other receivables plus cash and cash equivalents. Okay, got that? Okay, so we got clarity on that. Why? My inventories are excluded. So it's current assets minus inventories. Okay, in other words, it's trade and other receivables plus my cash and cash equivalents. That total worked out to 2,177,600. But I do know what my trade and other receivables are, don't I? So let's go there and let's find our trade and other receivables, which was 345,000. So we go back to our calculator, minus 345,000, and this will then give me my cash and cash equivalents of 1,832,600. Okay, and clearly you can see what you needed to do here was to use a financial indicator to be able to calculate your missing figure. Let's just re-explain so that we have absolute clarity on what we are doing here. Let me extend this page. Okay, we said that our asset test ratio is 0,8:1 given. There's it. I know that my current liabilities amount to 2,722,000, okay? And I know that this 0,8 is made up of two components. What are they? Trade and other receivables plus cash and its equivalents, right? Then what I do? I then calculated this missing figure by taking the 2,722,000 and multiplying it by 0,8, right? And obviously, once I've ascertained that figure, which I've already done for you, that gives you two components, receivables plus cash and cash equivalents. I then take my receivables and I subtract it from this figure, and voila, what am I left with? I'm left with my cash and cash equivalents figure of 1,832,600. Obviously, what am I now going to do? I'm going to take my 3,538,600, which is my total of my assets, 3,538,600 minus 345,000 is equal to that, minus 1,832,600 minus is equal to 1,361. Obviously, that becomes your missing figure, and that you would slot into your, as part of your inventories. 1,361,000, 1,361,000. Obviously, you've now completed almost the entire balance sheet. We've run out of time, but just to show to you that all that you're going to do now is you're going to take your total assets minus your current assets, and that will give you the total of your, because you've got your total assets, 15,457,000 minus your current assets, that will give you the total of your non-current. So that one, let me just illustrate it for you, minus that one will take you to your non-current assets, and obviously that one minus that one will give you the missing figure that you need there. Well guys, unfortunately, the flight has to land. Thank you for enjoying this flight with us. From me, Ashraf, and the crew, James and Abi, we trust that you are well prepared for your accounting exam. And yes, you're going to aim for the moon, because if you don't get there, voila, shining stars for always. Until next time, be good.